Hello, I am Shobhushachi Pal, VP Research, Eastern Finances Limited. Today, I want to list 7 reasons why I feel that this is a very good time to invest in the Indian markets. Now, firstly, I think valuations are extremely comfortable now, and the Indian markets are currently trading at about 14 to 15 times 1 year forward earnings, which is on the lower end of the long term PE band. Now, if we see, a lot of blue chips are actually trading at their multi-year lows, and valuations for some of these companies are extremely comfortable. To add to that, I think the market cap to GDP currently is at around 60%, which again is on the lower side of the long-term average. Secondly, I think if we see historically that any kind of crisis has actually given an excellent opportunity to enter the markets, and if people would have invested during the dot-com bubble or the global financial crisis of 2008, we have seen that over the next couple of years they would have easily doubled their money. I think the third point is that the government has already announced one round of stimulus package, and I personally expect that another round of stimulus announcements is going to come up quite soon. So, given all that, I think we should be up and running over the next 3 to 4 months. I think the fourth point is that we expect the Indian economy to grow by 0 to 2% over this year, whereas in comparison, a lot of other countries, there is an expectation of GDP degrowth this year. So India seems to be much better off, and one reason for that is that India is agrarian economy, which would provide some kind of cushioning as far as GDP growth is concerned. And on this low base of 0 to 2%, I think next year we could easily grow at 7 to 8% on in 2022. I think the fifth point over here is that last week there was an announcement that we expect monsoons to be normal this year. Again, being an agrarian economy, I think this will provide a lot of cushion, a lot of support to the economy. If we have normal monsoons this year, so I think that should provide us some kind of comfort. I think the sixth point is that a lot of people are actually talking about a post-COVID world being very much different from what we have faced pre-COVID, and I think we will see a sea change happening as far as the way business is done globally post COVID. I think if we just look at manufacturing, I feel that going ahead, a lot of economies globally would want to reduce their dependence on China and would want to reduce manufacturing from China. And I think one of the major beneficiaries of this would be India amongst a lot of other countries. And obviously, this will not happen overnight, and maybe this would be a gradual process over the next 4 to 5 years. Now, as far as service sector is concerned, again, what we have seen in this lockdown is that the way the service sector has functioned, we would see this continuing ahead once this lockdown ends. And just to give an example, be it the IT sector or the financial services, we would see that maybe the requirement for office space will come down, and maybe at the cost, the only thing which people would have to keep in mind would be upgrading their security systems and the security protocols. But I think this will bring in a lot of economies, a lot of reduction in cost for a lot of financial services, a lot of IT services going ahead. Lastly, I think the seventh point is that we have seen that last week, the Indian government put in a lot of FDI restrictions on investments in Indian companies. So I think one reason for that is that they feel that the Indian markets are oversold, and it could actually be easy target for a lot of foreign companies to buy a large stake in some of these Indian companies at low valuations, and they would try and safeguard that. So this provides us some comfort as far as government measures are also concerned. So I think what would be the investment strategy currently? I think 50% of investments should be done through SIPs over the next 1 year, and the remaining 50% should be invested gradually on days wherein the markets would fall 4 to 5%, or maybe some of the stocks which you want to invest in would fall maybe 8 to 10%, and on those days you can just pick up some stocks. And I think over the next couple of months you will get a lot of such opportunities. So I would like to sign off by just saying that stay home, stay safe, and stay invested. Thank you.